Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is up quite a bit here on the S&P. We got about 1.6% positive on the S&P 500. Nasdaq just right behind it, 1.5% performance today. Semiconductor had a monster day here, 5%. Pretty much all year long performance came from today, as you can see here. Year today, 5.3% on semiconductor. Dow is up about 1.3. Russell 2000, the small caps up 2%. Transport's about 2. Banks about 1.5. Energy 2.5. Biotech is kind of lagging there. Emerging market did see a pop there today, about 2.6%. And these guys are down today. Gold is up slightly, and Grayscale Bitcoin is up about 4.5% there. So tonight we will stick with these tickers as we usually do on these weekend analysis videos. Let's check out that 65-minute chart and follow up first, and then we'll come back to the daily chart, look at the longer term picture. So looking at the 65-minute chart here, so we've been talking a lot about the fluctuations and the levels and the gap area, the support, the Fibonacci, the midterm, and we've been pretty much scrutinizing this market in the last couple of days and this week, trying to figure out where that higher low is going to be. And I think one of the main points we want to focus on, what we've been talking about this week, is that market is gonna have its fluctuations, right, within that midterm, right? In the short term, the sentiment is gonna fluctuate a lot, right? It's gonna be bullish, gonna be bearish, bullish, bearish, bullish, bearish. It's gonna go back and forth, back and forth. I mean, that's just how the market is. Nothing crazy about it, nothing abnormal about it. It is not rigged. It is not crazy. It's just, this is just normal market occurrence, right? We're going to have some good days. We're going to have some bad days. We're going to have some lethargic days, consolidating days, big upside, big downside, big gap ups, big gap downs, gap ups and fade, gap downs and rally. I mean, all of that is just all part of the way this market behave. And as soon as you start trading this market, you signed up for this. You signed up for the volatility. That's why it is imperative that not only you understand the short-term movement of things, and I think if you can't handle this market's volatility, you really ought to focus on the long-term picture of this market. Because as you can see, I mean, ever since this is the election. That's the election week. We've never turned bearish in the midterm. We're always bullish. You can go back and check all of my videos. Almost a one time I turned bearish in the midterm of this market. I mean, there were fluctuations in the short term. There was some bearishness. There's some, neutral phase, all of that. But looking at things in the midterm, however, was I ever bearish in the midterm? Not once. Because we've been always cultivating the higher lows in the midterm, and because of that, because the market moves in fractals, what's going to happen is in the short term we'll see a pullback, and then what's going to happen is it's going to try to discover where that higher low is going to be. And if every pullback you thought that that's the end of it, that was the end of this bull market, on every pullback, you're not doing very well, and you've been missing out this entire rally here. And the market is continuing to cultivate those higher lows and higher highs in the midterm. And this scenario is no different. This scenario is no different. This scenario is no different, right? No one knows where the top is. No one can able to precisely predict the major top, right? No one was able to do it for decades and maybe even a century. No one was able to do it. If anybody claimed that they've called 2007 or 8 or whatever correction, they've been calling it for years and going through really difficult time, waiting for years and years and years and missing out rallies. And there are people who've been calling crash since 2012, 2015. when S&P was 90s, when S&P was 100s, when S&P, I'm talking Spider, right? When Spider was 180. Do you guys remember 2016 lows? Spider was 180. It's currently at 400. With that kind of move in the indices, what have you gained? Or have you been just calling tops all the time? So looking at this 65-minute chart here, so important pivot here. It is no coincidence. It is no mistake. It is not a dumb luck that the market found support right on that 50% retracement, coinciding with my midterm moving average. And also that's a level where we see that gap area that was a holding, right? That was important pivot, that was important support, that was important moving average. If bulls can protect this gap area, again, my midterm moving average is in that vicinity. Keep in mind that midterm moving average does have some resume here, right? So, bulls want to protect this area, 384, keep that gap open, and there's a good chance that somewhere here, buyers gonna try to discover that higher low, right? Before that thing gets up and start cultivating its own uptrend in the short term. First of all, we see lower, in the short term, we see lower low. That's definitive lower low there, right? That's a low, that's a lower low. On the oscillator, we actually do have slight higher low there. So we actually do have bullish divergence. I want me to see this thing getting up here, that recent high there, and then start cultivating in its own higher low and higher high. We saw bounce yesterday. We talked about how we need to clear the short-term moving average. We gapped up today. That gap still open. As of today, this was never filled. Why is tracking gaps so important, right? Because look at this. This gap was never filled. That's open. That was the bottom, right? This gap never filled. This was open, and that was the bottom. Short term, this gap never filled, and that was the micro term, I should say. That was a micro term support that came about today, right? The last, the fifth hour, because we initially gapped up and then we kind of moved sideways. We've pulled back on the fifth hour. We talked about it, this precise scenario yesterday, right? This was yesterday's price action. We talked about how if bulls want to continue in this momentum, clear above the short term, use the short term as a support because of prior resistance, act as new support, and then look at the 6th hour. All of a sudden, out of nowhere, maybe the bear's getting squeezed. Buyers are jumping in now. Let's check out that oscillator here. First of all, with that price action, we're getting very close to that gap. This gap was never filled. And with that gap that never got filled, that's when things get hectic, which we talked about back in mid-March here, March 18th. We talked about that this gap needs to be filled as quickly as possible. If not, things will get hectic for the buyers. I didn't say there's going to be a bear market. I didn't say the market is going to crash. Hectic. Definitely was a bit hectic for a couple of weeks or so. Nothing like crazy though. We didn't get into a bear market or anything like that. We just had a short-term fluctuations once this gap never filled. Gap never got filled. We're back at it. And this time it looks like it's probably going to go up and fill this gap. And there will be no more selling pressure there. But bulls opened up these gaps. There will be buying pressure continuing. Let's check out that oscillator here. We talked about this oscillator yesterday. We got the lower low, higher low, bullish divergence appeared yesterday, and we can see we've cleared that falling resistance on the oscillator as well, holding above that short-term gap, remained open and cleared this prior peak here. Now can we say that's then higher high here? So we got the short-term trend is back to bullish. Benefit of the doubt goes to buyers in the short term. Benefit of the doubt goes to buyers in the midterm. Benefit of the doubt goes to buyers in the long term. Let's check out that long term trending chart right here. So all we were analyzing on that 65-minute chart was this. Just a little blip there. That's why you must understand the long-term prospect of this market. This is why I do once a week on the weekend videos, weekend analysis like this one, so I can give you guys a long-term picture. We've been tracking this, rising pivot since late last year, and that's as long as we stay above that level, we want to give benefit of the doubt to the buyers in the short to mid-term. In the long term, are we bullish or bearish? In the long term, we're bullish. The market is continuing to cultivate and establish higher lows and higher highs. And so every time when somebody freaks out because we're seeing 2% down day or a little bit of fluctuations, they do not understand how this market looks and where the trend is in the long term, right? And so this is why it is important not only we understand the short term, right? That's a short term, and this is a midterm, and this is a long. That's what I mean. Short term, midterm, long term, right? In the short term, sentiment is going to change rapidly. It's going to be bearish, it's going to be neutral, it's going to be bullish. But the midterm and the long term, the sentiment does not change for a very, very long time. Because as long as we stick with this trend, you guys all like to recite Dow theory, right? Trend is assumed to be in effect or valid until it gives us a clear signal that it has been reversed. Clear signal. There's no clear signal in the midterm. There's no clear signal in the long term. So we want to continue to give benefit of the doubt to the buyers. Let's zoom in a little bit on this daily chart here. We talked about that short-term, mid-term moving average on my daily chart. And ever since the November here, that was the election week, right? And ever since then, that short-term and the mid-term on my daily chart been acting as support for how long now? December, January, February, March, for 4 months. And it continues to act as support, right? Can you imagine every single time when this market was at these lows, there was always somebody somewhere calling that's the top, or that's the reversal there, or it's not going to end well, or this is going to be the Great Depression coming, right? There's always somebody somewhere, because there's a zoo out there in your social media that you look at. And this is why we want to cut out the noise, right? It's not about what they say. It's what the market does that matters, right? It's not what you feel, what you hear, right? It's what the market does, what the market's been doing, that's going to matter. So we want to continue to stick with the trend that's been working, that this market has been respecting continually, right? Understanding the short term and mid term and the primary term and the long term sentiment. So, you can see we actually see that there's gap, small gap, they're still open. Looks like we found that support here. We got second day follow through. That's a good sign. And continue to make that higher lows here. If I go to line chart, you can see a definitive higher low here, right? There we got lows, higher lows, higher lows. And go to line chart, you can see that we perfectly actually respect that short-term moving average there. So I don't know when the market, nobody does. I don't know when the market is going to get back to kind of swift, smooth upside rally mode, because we've been kind of pretty choppy. Like it's been having this up and downs. Though market has been trending upside, it's been choppy, right? But this is better than, right? Especially position traders and long-term investors. This is better than going into a downtrend. This is better than making lower lows and lower highs. But every time a lot of people wants to kind of capture that smooth upside swing. And we can't force the market to do what we want it to do. When the market is ready, it's gonna give us that swift upside swing. Right now, this is the market that market is giving it to us. And we want to respect the fact that and have to deal with it and accept the fact that this is a market we are in. It might change going forward. But when we do our analysis, we always do our analysis based on what we see right now and what's been happening in the past, right? Let's go to Nasdaq here real quick. So Nasdaq is holding this gap here, and that's a good thing. That's a good thing that we're holding above that gap. I talked about this last week, and also as long as we keep that gap open, I think there's a good chance the buyers want to go up here and fill this gap. We talked about that rising pivot, that long-term pivot. This is a really, really long-term pivot, right? You can see that right here, right? And we talked about this even back in September last year. We're talking last year in October, right? How many people thought that Nasdaq was up too much? This thing must come back down. And then it actually ended up making much, much higher move. We're up here at 316 now. March lows, COVID lows, is trading at 164. I'm talking Qs, right? That's why you do not neglect these kind of levels, especially, and the S&P is still kind of hanging around near that level. We may see something like this on the S&P where we see that upside move. And this market is what? That's low, higher lows, and there's another potential higher low there. But we want to assume, trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We don't have any clear signal that it has been reversed, but we have a clear signal that we're in an uptrend. So we want to continue to assume that is going to continue to the upside. Let's zoom in here and check out some of these, some of the moving averages kind of just all around the area right now. But I think what's important is that gap area, potentially some sort of a flagging, but want to come up here and fill this gap as quickly as possible. Nasdaq's been lagging compared to other indices. You can see on the year-to-date performance, S&P is 4.2% positive, where the Nasdaq is negative 0.7%. It has been lagging, but can you blame it? Because it was leading the entire market last year. I mean, Nasdaq was the only index to make all-time high in just what? Let's see here, in just within 3 months. After about 30-35% correction with the COVID decline, bottomed in late March, and it got back to the all-time highs in June. That's 2 months. 2 months. Okay, 60 days. 60 days. We saw S&P or the Nasdaq correcting 30% or so or more, and then recovering in 60 days. That has never happened in the history of stock market. And then it kept going higher, and it just outperformed everything. And then we saw a little bit of fluctuations in September and October, made another huge move. So you can't really blame that market. The Nasdaq is lagging, right? Big Uncle Nasdaq is waiting on some of the other indices here, being kind so that other sectors and other stocks and indices can catch up, and so that the market as a whole can able to rebalance itself. I want to continue to give benefit of the doubt to the buyers on the Nasdaq in the midterm and the long term. Let's go to gold here real quick. Gold is finding maybe a little bit of traction. We've been actually tracking this level for quite some time. This is an important level. Last level, my fib, and then the horizontal pivot there, right? Prior resistance. Potentially as a new support, my last level of fib. Let's kind of move this here. You guys can see right there, right? So you can see that's that peak. That's the low there. And as far as like a primary term is concerned, so are we bullish or bearish in the primary term? The long term, right? We're bullish. Right, the gold market is trying to discover that higher low, right? It's trying to discover the higher low. In the short to midterm, we are bearish, but remember the fractal thing, right? This is a long-term trend, and within that long-term trend, we will have the corrections in between along the way as market trying to discover next higher low before cultivating higher there. So I think we want to be a little bit more patient. I think we're getting pretty oversold here. I think we're potentially finding a low somewhere in that vicinity. Let's go to Grayscale Bitcoin here. So Grayscale Bitcoin, last week I talked about at this level that it needs to be filling this gap right here. Well, this gap is not filled. And with that, things might get hectic. And so we came down almost every single day, like 6%. But we're up about 4.3% today. Nice gains though in year to date. So I had a nice rally this year. However, it started to stall here a little bit. So what the buyers need to do if they want this bullish pressure to continue needs to get up here and fill this gap as quickly as possible. When I go to line chart, we still do have a definitive higher lows here. Only problem is that's not higher high. That's actually lower high right now. So we're just kind of in that, in that area where, okay, we're starting to see maybe a little bit of, and obviously, market and this Grayscale Bitcoin made about 500% since the lows here back in, 2020 October when it was trading at 10s and it went up to like 60s and 50s. And so obviously this is level where everybody likes to start chasing. Right, and that's what you want to be careful when everybody wants to get into it. Whenever feeling like they want to start being part of Bitcoin again, you want to start being cautious. So I think if we can hold this level, you can see my midterm moving average. We talked about how I want if this market wants to make a move, continue to make a move to the upside with this momentum, we need that midterm. You see that blue dotted moving average? That moving average will continue to move to the upside. But if this thing starts to do something like that, and this midterm moving average start to move sideways to the downward, things might get hectic in Grayscale Bitcoin. So this is a kind of like level where you want to be fearful, right? When others are greedy, that's when you're fearful. When others are fearful, that's when you want to be greedy. You guys enjoy your weekend, and good luck trading next week.